It's the Black Real Estate Dialogue. Tune in. Tune in. Tune in. Tune in.
Hey everyone, thank you so much for coming to another session of the B.R.E.D Investing Community. Very excited about this class today with Dave Ball. Dave is a super knowledgeable guy, really in a lot of the details of home buying that people don't really talk about. So it's definitely a privilege to have you, Dave, and appreciate you taking some time to teach us tonight.
Oh, of course, thanks for having me on. I'm going to run through you guys just basically some basics as far as understanding how to understand what you're reading when you're buying a home. Like I find a lot of times, so let me get into my background. I'm actually an underwriter right now, and this is actually kind of an old presentation. It says top producing loan officer. So I used to be that and I switched over to underwriting. But one thing I found out as a lender was that a lot of folks don't know how to read a loan estimate. There's a lot of numbers on there. There's a lot of stats, and why would you know how to read it? Like it's not something that's ever taught in school. And the only person that would actually tell you how to read it is a lender who probably has a better quote than the other quote you're looking at. But outside of that, there's honestly no reason for a lender to break this down for you. And so, in my experience, I saw a lot of folks were getting taken advantage of just through the basic things on not understanding how to read quotes. Because I think a lot of times we're conditioned basically to just go with the lowest rate. We always hear, there's companies called like guarantee rate, the lowest rate. We're told rate, but that's not always the best scenario. So I'm going to run through how to understand what you're looking at, because that's how you make or lose money during the home buying transaction. So that's a picture of me. I've been in the industry for about 7 years now. I've owned 3 homes. I got a degree in finance as well, if that matters to anybody. And so that's from the whole presentation. So what we're going to get in right now is basically what I call the money. This is where it kind of like makes or breaks a deal in the home buying process. And so, here we go. So like I said, this is where a bad, or honestly, just not even bad, but unexperienced loan officer could potentially take advantage of. Because I say unexperienced, it took me about a solid year before I understand truly how to read a loan estimate and to explain it to the buyer. But the thing was, I didn't know how to actually explain it or read it, excuse me. And so this right here is basically a breakdown of the basic loan estimate that you may see. And so as you can see, there's numbers all over the place. And so before I get into this, there's basically two types of paperwork you'll see during the home buying process. One you'll see is basically like a cost worksheet. And what that is, that's just a lender's snapshot of the fees associated with the loan. And they come in various sizes and forms. There's no basically standard format for that. What a loan estimate is, you get the loan estimate once you're under contract on a home. And so the important thing about a loan estimate is it's the same format no matter if you go to, this Aspen Bank, generic bank here, you go to Chase Bank, you go to your local credit union, you go to a mortgage broker. A loan estimate looks exactly the same no matter where you get it from. And so that's key because it allows you to actually compare 2 quotes accurately between lenders. And so I always kind of ask folks, what matters most to you in your opinion when you're looking at a loan estimate? And so typically folks will say the interest rate. I think that's what everyone's conditioned to say is the interest rate. Folks brag, hey, I got a 2 point blah, blah, blah interest rate, 2.5, I got a 3.125 interest rate. No one ever says, I got a 2 point, no one ever says like in this scenario, I got a 3.875 interest rate with $405 in origination fees. Like literally no one ever says that because everyone's conditioned to talk about the lowest rate. And so your lender knows that. And so they'll present you a low rate, even though that may not be the best scenario for you. So me as a loan officer, someone that understands how fees work, what I look at and what I pay attention to when going through quotes is this block A, origination charges, and this block B, services you cannot shop for. And that's important is because these are literally the only 2 blocks that matter in a lender's quote. And I will go through this in the presentation, but every other single block in this quote is either a standard fee or just an estimate right now that will become a standard fee later, no matter who the lender is. So the only fees your lender controls are these blocks A and B. And so what happens a lot of times is folks will get wrapped up in this cash to close. Whoops. Trying to do a highlight. But folks will get wrapped up in this cash to close right here in the bottom left corner. And they'll say, hey, maybe one quote from the lender will say cash to close is $16,054. Another lender may see their cash to close is $14,000. Another may say $17,000. So what folks will do is they'll look at the interest rate and say, okay, what's the lowest interest rate and what's the lowest estimated cash to close? Well, the key thing there, that's an estimated cash to close. So, and I've seen this actually in real life. I see it happening in real life, which is one lender will have lower lender fees or higher lender fees than another lender, but they will grossly underestimate these blocks C, E, F, and G in order to make their quote look better, and therefore have this estimated cash to close look artificially low when it's all said and done. And so what happens is the unexperienced person moves forward with the lowest estimated cash to close, but then they get an inflated number at the end of the process. And so we'll jump into the details here. And so what I call this is the money shot here. So as I mentioned, these blocks A and B on a loan estimate are the only fees that a lender controls. And so whenever you're comparing quotes, literally just compare the fees in block A and B. I'm gonna say this a bunch of times, blocks A and B are the only ones that matter when comparing quotes. Just completely ignore everything else on the loan estimate. And so you're 90% of the time, you're going to see some sort of origination fee, and I'll go through a chart at the end of this presentation, but it's very rare that your interest rate will fall exactly on an eighth of a point. So rates come in eighths of a point. So you'll see like a 2.500, 2.625, a 2.750, 2.875. But your specific profile is based on a lot of things, based on the loan size, the down payment, your credit score, the number, the term, the property type. It's based on a bunch of different factors. So it's very rare that your scenario falls exactly on one of those eighths of a point. So what happens is it falls in between actually 2 points. And so there's fees to buy the rate up and buy the rate down. And there's a chart that explains this a little bit better later in this presentation. But you'll pretty much always see this. There's going to be some sort of application fee and some sort of underwriting fee. Lenders call them different things, but you're basically looking to see if there's some sort of origination fee, which 90% of the time there will be, and then some sort of combination of lender fees here. Is a processing fee, underwriting fee, etc. And it'll be kind of intuitive hopefully it'll be intuitive if it makes sense to apply to the loan. But you will every now and then just see random fees that you'll be like, hey, what is that? And it's just the lender honestly trying to make a little bit of money. Like I've seen like internet fee on this block. Like what in the world is that? I've seen a convenience fee, like literally called like a convenience fee. And now I'll see a lot of random fees on here. And honestly, they're just fees to take advantage of the uneducated borrower. And so one thing I like to point out is big banks, a lot of times they'll get like a bad rap just because they're in the news, honestly, because they may do bad stuff. Honestly, they're just bigger than other lenders. So if Chase messes up 3% of the time, they have a million customers or a million plus customers. That's way more than your local mortgage broker. If they mess up 3% of the time or 5% of the time, and they have 100 customers, 3% of a million versus 3% of whatever I just said, 100, there's going to be more complaints. And so I would tell you this, I don't endorse banks or brokers, do whatever you want to do, but I've seen the worst quotes ever in my life from mortgage brokers. I'll just leave it at that. And that's just due to lack of oversight, in my opinion. And so this block down right here, this block B, services you can not shop for. And so it's stuff like your appraisal, your credit report, flood determination fees, standard tax monitoring fee, tax research fee. And so it's stuff you cannot shop for because it's stuff that the lender orders on your behalf. Like you can't order your own appraisal. So like if you go to Aspen Bank in this scenario, they're going to charge you $405 for an appraisal. That's what they charge it. They have to order the appraisal. Your lender has to order the appraisal. You cannot order your own appraisal. But Chase may charge you $600 for the appraisal. Rocket Mortgage may charge you $550. But if you're going with that lender, that's what they're charging for an appraisal, no matter what. And a lot of these fees down here in B are actually pretty standard. And so you kind of want to look at these fees as well. And so basically, when I add these two up, and so like in this scenario, the fees come out to $2,474 in this scenario. That would be the lender fees that you want to look at. And so once again, you're comparing just blocks A and B. And it's also important to know that when you're comparing fees between lenders, they have to have the exact same interest rate too. So you can't compare a quote from Aspen Bank that's a 3.875 to a quote from, I don't know, Guarantee Rate that's a 3.500, because the origination points are going to be different in those scenarios. So, and once again, we'll go into that later in the slide, but whenever comparing fees, compare block A and B and make sure they have the exact same interest rate. And so if two lenders are quoting you different interest rates, say, hey, present me a quote at whatever you're presenting me now, 3.500, and present me a quote at 3.875 as well, so I can compare that to the other lender. You can tell them each to present you quotes at the other lender's interest rate, so you can accurately compare the origination fees. That's literally the only way to compare origination fees, is to compare the exact same interest rate.
Hi everyone, Sam here from the Black Real Estate Dialogue. Make sure to hit that notification bell and that subscribe button, and to visit us at blackrealestatedialogue.com.